today we've got a few things to get into. We talked about yesterday this, kind of rally that we're having in the markets here. A lot of this is based on the, kind of the resolution of the Mexico tariff threat. The Trump administration had talked about putting tariffs on Mexico, and of course the markets had sold off a little bit of concerns like, oh geez, more tariffs. But those tariffs were never actually implemented. Apparently, a lot of the negotiation was actually already well into the works. Tariffs were kind of more of a hammer to conclude negotiations, and a lot of the deals had already been agreed to with Mexico. So it just kind of expedited the process of getting a deal done with Mexico in order to avoid the tariffs on immigration. So the markets have rallied a bit off of that. But the one thing that hasn't changed, and again, there was no impact to the financial markets or to the economy from Mexico because no tariffs were actually applied. So the sell-off and the subsequent rally were really a non-event in relation to that, because the issues with tariffs and where those are actually impacting economic growth, and we're seeing this more and more across the economic data, is really coming from China. And we don't have a resolution in place with China. There is hope that there will be a meeting at the G20 summit that's coming up, and that somehow we'll make some progress on this deal with China. I've said this before, don't hold out your breath for that, because China has no incentive, despite a lot of the media headlines that China's just on the fringes of falling apart. It's going to be Russia. No, it's not. Two big differences between Russia and China. But the issue here is that China has more at stake to lose in these negotiations than they have to gain. And so that puts China in a very tough spot in order to acquiesce to a deal that is not economically long-term beneficial for them. And as I've said before, President Xi is in office for life. He's only got to deal with Donald Trump for 4 more years. So agreeing to something today that impacts the long-term economic dynamics of the country is something that Xi is not going to be willing to do currently. And this is why they're playing hardball, and they're going to continue to play hardball here for a while. So again, don't expect a resolution coming out of the G20 and everything's going to be fine and markets are going to take off to the moon. There's a lot more of this to come, and which is going to provide a lot more volatility to the markets. And the big thing is really that a economic decision and that's coming right now. Again, if we take a look at the economic data, right, what's happening with a lot of the data on the fronts, tariffs are impacting that. It's a higher cost on businesses and consumers. Tariffs have to be paid, and those costs are passed on. Now, the one thing that is important about this, again, as we take a look at, kind of around the globe about how trade works and these type of issues, there are also knockoff effects that are coming out of this. Again, there's one thing that businesses can do very quickly is they can adapt to, tariffs or other types of impacts, and they can shift production, they can shift consumption. It's hard to shift production. If I'm already manufacturing stuff in China, it's hard to pull up a plant and move it to Vietnam and start producing there. It's much easier just to shift production. I just buy less from China and I buy it from some other source if I can get it. Now, the problem is a lot of these things are not necessarily easy to get. But pay attention to the differentials between what is really happening versus what headlines tell you. Because a lot of the headlines that are coming out are just flat out wrong. Most of them are misinformed. And this idea that we can crush China with tariffs is very misleading, because it's simply not the case. You have to understand how economics in China works versus how they work in the U.S. and what they're willing to do to win a long-term game. Be right back after the break.
Catch Lance Roberts' podcast later at lancerobertsshow.com.